What is going on, my friends, and welcome back to the Crypto Catch Up. Of course, your number one place to catch up on crypto. Now, I want to start the morning off by giving you a quick update and a quick video on what happened with CPI data and what it can mean for the market. Of course, we usually like to do a full analysis of the market. We'll do that in a couple hours. Let's just focus on CPI data for now because it is incredibly important. Now, what we can see here is that CPI data came in just about 15 minutes ago or so from the time I'm recording this video, and it was worse than expected. From a year-over-year growth perspective, analysts were expecting a 2.3% rise for the CPI and a 3.2% rise for core CPI, and we actually got 2.4% on CPI, 3.3% on core, meaning that both of them came in 0.1% higher than expected. Looking at a month-over-month basis, we were seeing analysts expect a 0.1% out of the CPI, in which we got a 0.2%, and a 0.2% out of core, which we got a 0.3%. So on all accounts, we saw 0.1% higher than analysts were expecting. Now, if we do look at this from a month-over-month basis, you can see that we are basically seeing inflation rising at the same rate in which it was during the previous report. And what this means is that some of the measures that were put into effect to continue to drop inflation could very likely be starting to run out, maybe run out of juice. Maybe they're just not simply having the effect that analysts thought they would have. And of course, that could be a little bit worrisome. Now, whenever we do look at the actual report itself, we can see a couple things that have led to, of course, this jump up, right? There are certain things that are just growing right now. You look at apparel, for example, 0.3% in August up to 1.1% in September. That's nearly a 3.5x right there. You look at a couple other things such as transportation services from 0.4 to 0.9 to 1.4, consistently growing. You look at medical care services from negative 0.1 to 0.7, a solid growth there. And just a couple other factors that are just slowly growing, such as food. Food went from a 0.1 to a 0.4. We also saw there was one more that I was paying very close attention to. This one. Energy services, guys, negative 0.9 to 0.7 in just a 1 month difference. It just goes to show that there are certain things that are already starting to jump up in terms of inflation, and that, of course, could be somewhat problematic. Now, why could that be problematic? Well, the reason being is, especially for crypto investors, and the reason being is because of what we have been seeing from the Fed and the impact that it's having on the markets. Of course, you guys know there's a Fed meeting in about 28 days from now in which a lot of people have been expecting to see a 0.25% reduction in interest rates. Now, as a result of these interest rate reductions, people have been getting a little bit more risk on. People have been getting back into altcoins. You've been seeing meme coins running. You've been seeing some of your more risk on assets getting momentum and traction because people thought that we were entering a more risk on environment. But quite frankly, in a situation like this in which we see inflation coming in worse than expected, you don't know if that's going to be a big enough impact to cause the Fed to want to slow down on their interest rate cuts, allowing the market to, of course, continue to feel the effects of these higher interest rates and hopefully continue to pull back on inflation, because what they're doing right now from this month's report quite clearly isn't working. And so because of that, it is going to lead, I'm sure there's going to be some volatility that comes as a result of the CPI data. Probably not an absolute shit ton, quite simply just because a lot of crypto investors are getting used to it. But at the end of the day, this is somewhat impactful. I actually do think intrinsically this causes an effect on crypto. I do think that crypto is getting a little bit maybe more risky to some degree because of the environment in which we may or may not be getting into. But in the grand scheme of things, I don't particularly think it's that big of a deal. It's just going to be another bump in the road to get where we're going to get to eventually. And so I'm not too concerned about it, but I am aware that volatility will likely enter this market. And I do actually think that that is logical. I think it's logical for some volatility to appear as a result of this. Now, the next thing that we need to do is keep a very close eye on the Fed and see what the Fed says. If they say anything regarding the fact that this was worse than expected, that they're going to have to change course, change path, they're going to have to make alterations, I wouldn't even be shocked if we do see them not go in and not pull back on interest rates for another month or two, right? That wouldn't shock me in the slightest, quite simply, again, because if they continue doing what they're doing, inflation is going to get higher. And inflation is already coming in higher than expected. So how could they? So all eyes are going to be on them. The ball is in their court at this given point. And although I've told you all consistently, don't base your trades, don't base your investment thesis, don't base any of those things off of this type of news. It is important to pay attention to it because although we all think that Bitcoin's going to say hit 80 or 90 or 100K, whatever it may be, the course to get there could be heavily impacted by news such as this, which is why it's important to pay attention to it. So with that in mind, I just wanted to share my quick thoughts about this. Maybe one day I'll get a little bit deeper into my full-blown thesis as to why I think inflation's only going to get worse. I think that we're going to very likely see a point in time in which inflation gets, way higher than it is now, 4%, 5% again, because it's the only way for the U.S. to combat its deficit. It's the only way out of this realistically, but we'll get into that another day. That's a whole rant for a whole nother time. So just wanted to update you on this. Let me know your thoughts down in the comments below, and then in a few hours I will post more of a video going over the market, fundamentals, metrics, and much more. So of course I hope you guys did enjoy, and I can't wait to see you all next time. Peace out, everybody.